Welcome back, guys. Welcome back. So, who is going to be our first subscriber and our first viewer today? Okay. So, welcome back, guys. Okay. All right. So, good morning. So, I don't know if you can hear me clearly. We are live now. If you can hear me, just leave a comment. Okay. Just leave a comment and let me know that am I audible enough? Can you hear me? Our first viewer, can you hear me? Let me know in the comment section. Okay, guys, welcome. If you can hear me, please just let me know. You can leave a comment so that I will know that I'm audible enough. So, guys, welcome. Good morning. Welcome. Welcome, guys. Okay. So I think we'll continue from where we stopped yesterday. We'll just continue from where we stopped yesterday. Okay. We'll just continue from where we stopped yesterday. So I want to take a sell now for crash 1000. Okay, guys, I want to take a sell now. So I'm going to take a sell now on crash 1000 index market, and then Okay guys, so we're actually in a sale here, so let's just wait for few minutes before we continue our yesterday's class. So before the end of today's class, I'm going to explain why I took this particular trade. I don't know if you guys can hear me. Please, if you can hear me, just let me know so that I'll be sure that we are on the same page. Okay. If you can hear me loud and clear, let me know. So you notice that I actually took this trade with 0.25 lot size, and then I was able to remove 0.20 from it. Okay, and that's why you see that I was left with 0.05 here. So this is the lot size we want to use because of our equity. So anytime you have a small account, what you can do is to reduce your lot size so that you don't blow your account. Okay, you can reduce your lot size so that you don't blow your account. So you can see the our stop loss is at this particular level here. Our stop loss is at this particular level here. So our risk to reward ratio is like 1 to 10. 1 to 10. 1 to 10 risk to reward ratio. Okay, so 1 to 10 risk to reward ratio. So before we continue our class, let me just quickly explain the reason why I took this particular trade. Okay, let me just quickly explain why I took this trade, and then we'll continue with our yesterday's class. But please, if you can hear me, I just want you to type in the comment section that you can hear me so that I'll be sure that you guys can hear me and you are following me. Okay, let me know in the comment section. Please let me know in the comment section that you guys are following. Let me know in the comment section. Please let me know in the comment section before I can continue. Let me know, please let me know before we continue this class. Are we together now, please? Okay, I want to believe that we can all hear me. Okay. Okay, so let me just explain why I took this particular trade here. Okay, remember we've placed our take profits already. Okay, we've placed our stop loss here already, so you can see what we are risking for this particular trade here. Okay, you notice that we are risking like $1 to make $12. Okay, so the risk to reward ratio is 1 to 12. So if this trade should go in our favor, we'll be making $12 from this trade. All right, and then if this trade should go against us, we'll be losing rather $1. Okay, so it's a good risk to reward ratio. So this how we are supposed to be trading the market. Okay, this is how we are supposed to be trading the market. So let me just quickly show us why I took this particular trade. Okay, so the first thing we want to do is to know the direction of this market. Okay, is to know the direction of this market, is to know the direction of this market. So if we want to know the direction, what we want to do, you will notice that this is the weekly time frame. Okay, this is the weekly time frame here. This is my weekly time frame. So this weekly time frame tells me that I'm supposed to analyze from the weekly time frame. Okay, so this is the weekly time frame here. All right, so this weekly time frame here, if you notice, you notice that market has been selling. So market has been selling on this particular time frame here. Market has been selling on this particular time frame. Okay, market has been selling here. Market has been selling, and you will notice that this sell here, so what we want to do now is to know, remember I talked about three things in our class yesterday. The first thing is to know the direction of the market. Okay, we want to know the direction of the market. So the direction of this market now is a sell on this weekly time frame. Okay, this is a sell market. Okay, market has been selling. Market has been selling on this particular um market. Okay, market has been selling. Then the next thing we want to do is to know our key levels. Okay, our key levels. All right, our key levels. So these key levels will help us know exactly where to look for our trade in the market. Okay, so the key level here that we have now is a resistance key level. So we can see that here. Okay, this is a very strong level on the weekly time frame. This is a very strong level here. Okay, this is a very strong level on the weekly time frame. Okay guys, so this is a very strong level here. So remember, we've talked about the direction here. Okay, and then the second thing is our key level. Okay, so our key level is a resistance here. Okay, so for our direction, it is a downtrend. A downtrend. Okay, and that's why you can see markets moving downwards. Okay, so our direction is a downtrend, and then this is our key level here. Okay, so these are resistance. Let me write that clearly so that we can see it well. These are resistance. Okay, so after noticing that, what we can do is to go to like the daily time frame now. On the daily time frame, what we want to look out for is our candlestick pattern. Okay, it's our candlestick pattern here. Okay, and there are many candlestick patterns that we can use whenever we want to analyze the market. Okay, there are many candlestick patterns that we can make use of. Okay, so this candlestick pattern is a very strong candlestick pattern, this particular one here. So this pattern is called a pin bar. Okay, it's called a pin bar. All right, so this candlestick pattern was formed yesterday. Remember, this is the daily candle. That's the daily candle there. Okay, that's the daily candle that was formed yesterday, this particular pin bar candlestick pattern. Okay, it was formed yesterday, and now you can see today's candlestick. Okay, so let's just go to the 4-hour time frame. Let's go to the 4-hour time frame. So we can see on the 4-hour time frame, we can see our reversal candle here. So this was like the last liquidity that was taken here. Okay, this was like the last liquidity level that was taken here. So this was like the last liquidity level that was taken here. So guys, don't worry, we'll talk more about liquidity and everything. But so far our trade is we just have to hold this trade. Okay, we are going to hold this trade. We are going to be holding this trade. Okay, and then maybe later we can add more positions. We are going to hold this particular trade. So let's go to the 1 hour. Okay, so this is the liquidity I was talking about here, guys. This liquidity I was talking about here. So price came and has tested this order block here. Okay, and then price took out liquidity here. Price took out liquidity there. Okay, price took out liquidity. So any moment from now, this market will be crashing. All right, this market might be crashing any moment from now. Okay, so let's quickly explain what we have today. So later we'll come back to this particular trade, but let's quickly go into today's training that we have. Okay, so we are going to be looking at market structure today. We'll be looking at market structure. Okay, so we'll be looking at the market structure. So before we look at the market structure, let's just quickly look at the candlestick patterns that we have. Okay, the candlestick patterns. Candlestick patterns. Okay, so there are 3 candlestick patterns that I make use of whenever I want to place a trade. Okay, there are 3 candlestick patterns. Okay, the first one is the pin bar candlestick pattern. Okay, is the pin bar candlestick pattern, and this is the pin bar here. Okay, so we've talked about the pin bar here. All right, the pin bar candlestick pattern. So this like the pattern that we can make use of whenever we want to place a trade in the market, the pin bar candlestick pattern. Okay, so this is one of the patterns we can make use of, the pin bar candlestick pattern. Okay, so this pattern is a reversal pattern in the market. Whenever we see it, it means that market wants to turn. And if this pattern happens at a resistance level or a support level, there is a very strong candlestick pattern. Okay, so if we go to maybe like the 4 hour now or the daily, if you go to the daily, you will notice that this is a strong resistance here. Okay, market actually turned from this level here. Okay, and whenever you see the candlestick pattern formed at that level here, okay, this particular candlestick pattern then is like a reversal pattern in the markets. Okay, so it's a very strong reversal pattern in the market. So please, I want you guys to take note of that pattern, the pin bar. Okay, pin bar. All right, pin bar. So that's one candlestick pattern that is a very strong and reliable candlestick pattern in the market. And the idea behind it is that when markets open here, you notice that when markets open here, the buyers pushed price upward. Okay, so if we go to the 4 hour time frame, we'll be able to see that clearly. All right, we'll be able to see that clearly on the 4 hour time frame. So on the 4 hour time frame here, we notice that or let's go to the 1 hour time frame. So yesterday we can see that price actually opened here and sold, and then price started buying upward here. Okay, price started buying to this particular point. Okay, and then the buyers could not push price further up. Okay, and that's why you notice that there was a strong rejection. So if we go to the 4 hour time frame, on the 4 hour time frame, you will notice that market started rejecting here. Okay, and then sellers closed this buy market with a sell. Okay, and then the next candle that opened with a sell. All right, opened with a sell, opened with a sell, and then buyers had to close this sell with a buy. Okay, so it was at this moment now that if we go to the daily time frame, you will notice that the market kept on selling and closed with a sell for yesterday's candle. Okay, market closed with a sell here. All right, so you can see the sell candle here. Market closed with a sell here, and then the buyer started pushing price upward again. Okay, the buyer started pushing price upward again, but this particular market is a sell market now, because any moment from now price is going to start dropping really hard. Okay, price is going to start dropping really hard, guys. So the best thing we can do now is to wait for price to give us our sell confirmation. Okay, so this is just like an early entry here. This is just like an early entry. So I might adjust my stop loss because price might want to come back to this same level, okay, before it finally starts crashing. So guys, price might crash any moment from now, but we are just going to hold this trade. Okay, we are just going to hold this trade. So the first candlestick pattern we talked about here now is the pin bar. Okay, is this particular candlestick here called the pin bar candlestick. Okay, and then the next candlestick pattern we want to talk about is called the inside bar. Remember, the first one we've talked about is the pin bar. Okay, the pin bar candlestick pattern, and then the second one is called the inside bar. Okay, it's called the inside bar candlestick pattern. So that's the second candlestick pattern we want to consider. So remember, the first one is the pin bar, and then the second one is an inside bar. So let me show us an example of an inside bar candlestick pattern. Okay, so if we look closely here, you will notice that we have an inside bar candlestick pattern. Okay, you will notice that we have an inside bar candlestick pattern. Okay, now I want us to forget about the wick here, forget about this wick here, this wick here, and this particular wick. Okay, so just forget about this wick, this particular wick here, and this wick. Okay, so this is an example of an inside bar candlestick pattern. Okay, and this candlestick pattern is a reversal pattern in the market. Okay, it means that this particular sell candle or this particular red candle is inside of this candle. Remember, this candle is, is a full candle here, and then this sell candle is inside. Okay, so it means that the body of this red candle is not outside this candle. Okay, it's not outside above and it's not outside below. Okay, but it is inside this candle. Okay, the same thing is true also for here. You can see that this red candle here, the body of this candle is inside this green candle. Okay, so this is like an inside bar. Okay, let's look for another example. Here you notice that this particular red candle, the body is inside this particular candle here. Okay, so let's look for more examples. You notice that this particular candle here is inside this particular candle. Okay, let's look for more examples so that we can explain the inside bar. You notice that this particular um, green candle here is inside this red candle. Okay, so this particular green candle here is inside this red candle. So that is an example of an inside bar. So to be able to make use of this inside bar, we want to see it happen, occur near a key level. Okay, remember the first example that we make use of, which is our pin bar here, you will notice that our pin bar, this particular pin bar here, actually happen at this particular resistance level. Okay, so if we go to the weekly time frame now, on the weekly time frame, you will notice that this is actually our resistance level. Okay, and then on the weekly time frame, we will notice that on the weekly time frame we will notice that I'm trying to locate. On the weekly time frame, you notice that you notice that we have like an inside bar here. Okay, this particular candle here is inside this candle, and you can see this particular candle here is inside of this candle. If we go to the daily now, you will notice that this particular candle here is inside of this candle, and that's why you can see that market actually turned at this particular level. Okay, so guys, that level is a very strong level in the market. It's a very strong level in the market. Okay, it's a very strong level in the market. So we've talked about um two candlestick pattern. The first one is the pin bar. Okay, the second is the inside bar, and then the third, which should be the last candlestick pattern we'll be looking, is the engulfing candlestick pattern. Okay, we've talked about the pin bar, the inside bar, and then I want to look at the engulfing. Okay, so let me write that clearly so that we can see it. So the third one we'll be looking at is the engulfing candlestick pattern. Okay, so what does the engulfing candlestick pattern looks like? Let us look for an example here. Okay, so an engulfing candlestick pattern looks something like this. Okay, it looks something like this. When this you now when this particular red candle, the full body of this particular red candle covers this candle, then this is an example of an engulfing candlestick pattern. Okay, once this particular red candle here, once it covers this green candle here, we can say that what it is an engulfing candlestick pattern. Okay, it is an engulfing candlestick pattern. All right guys, now this here also is an engulfing candlestick pattern. Okay, this here is an engulfing candlestick pattern. Okay, this here is an engulfing candlestick pattern. Okay, let's look for more examples. This here is an engulfing here. So the idea is that this particular green candle covers the body of this. Okay, it engulfs. Okay, This is an example of an engulfing candlestick pattern. Okay, this particular green candle covers the body of this candle. Okay, this is an example of an engulfing. This particular red candle, the body here covers this particular candle here. Okay, this particular one here covers this particular candle. Okay, so this is an engulfing candlestick pattern as well. This particular candle here covers, this candle. This particular one here covers this candle here. Okay, so guys, this is just an example of an engulfing. Okay, so also we want to take, whenever I want to take a trade using the engulfing candlestick pattern, we want to do that at a very strong level. Okay, remember the first two examples here, this particular one happened here at the resistance here. That is for our pin bar. Remember our pin bar, okay. And then the next one we talk about is our inside bar candlestick pattern. Remember, this inside bar also occurred at the resistance level here. And then let's see if we can see our engulfing. Okay, you can see an example of an engulfing here. Okay, you can see that this particular red candle here, covers this particular green candle. Okay, so this is an example of an engulfing happening at the resistance level. Okay, happening at the resistance level. And also you can see the inside bar, this particular red candle, the body here is inside of this. Okay, and then if you notice, that we have like a double top here. So we'll talk about the double top later as we progress in this free class. Okay, we'll talk about the double top. We'll look at the head and shoulder pattern, the double top, and the different candlestick pattern that we have in the market. Okay, so but for now, let's just continue. So now we are going to start the market structure now. Okay, we are going to start the market structure. So this market is still buying, guys. This market is still buying. So I'll just adjust my stop loss now. If I put my stop loss here, then we are going to be risking $2, guys, and I don't want it to be that way. So let me place the stop loss somewhere here. Let me look. So we are just having like $4. Okay, we are having like $4. So let's see if we adjust our stop loss now, because if we adjust our stop loss above here, okay, let's leave it at 1.7. Okay, so it's still a good risk to reward ratio. The only thing was that we entered this trade with we entered this trade very early, so we'll just adjust that now. Okay, we enter this trade very early, guys. So but the risk to reward ratio is still great. Okay, if you look at the risk to reward ratio, it's still 1 to 11. Okay, it's still a good risk to reward ratio. So maybe we might be increasing our equity. We might increase our equity later. Maybe after this training, I will increase the equity so that we can enter for this trade. Okay, but definitely we might enter more positions, guys. So let's just quickly look at the market structure. Okay, let's look at the market structure. Let us look at the market structure. So now we want to look at market structure. We want to look at market structure. So the market structure, guys, helps us to know the direction in which market is going. Okay, so if you want to know if market is going upward or downward, okay, let's say upward, downward, okay, so this is what is called market structure, to know the direction of the market, to know if market is going upward or downward. Okay, so before you take any trade in the market, what you want to do is to be able to determine the market structure of that particular market. Okay, to know if that market is either going upward, okay, or if the market is going downward. Okay, so that is the idea of um market structure. Okay, so let's quickly look for the market structure on our chart to be able to know the direction of a particular market. So let's go to the 4-hour time frame. Okay, let's go to the 1-hour time frame to look for the market structure. Okay, so we are on the 1-hour time frame now, guys. We are on the 1-hour time frame now. We are on the 1-hour time frame. Okay, it's okay. You can see the structure of this particular market. So how do we know that this particular market is a down market? Okay, so how do we know? So the first thing we want to start to do now is to analyze the beginning of this market. Okay, so let us assume that this is all what we can see on our chart here. Okay, from this particular top here, okay, to this particular bottom. Okay, so let's just analyze and know why this is a downwards market. Okay, so the first thing we will notice is that market actually sold here at this particular level. Okay, market actually sold at this particular level here. You notice that market actually sold at this particular level. Okay, so this first leg is a sell, is a downward market. Okay, and then we can see here now the market actually bought up. Okay, so we call this move here a retracement leg. So this particular move is called a retracement. Okay, and then after this retracement, what we notice again is that market actually sold again downwards. Okay, so market actually started selling downwards. So remember, this was where market actually started from. Market sold. So this is the first leg. Okay, so this is our first leg. Downwards, and then this here is our retracement leg. Okay, this is like our second leg. Okay, so we notice that after this particular second leg was formed, the next leg was a sell, which is this particular leg here. Okay, so this is like the third leg for our sell. Okay, that's like the third leg for our sell. And then we notice that market came back for a buy here. Okay, market came back for a buy. So this is our fourth leg here. Okay, and then lastly we saw this particular leg here, which is a sell. Okay, so we saw this particular leg here, which is actually a sell, guys. So this sell here suggests to us that, so if you notice, you will notice that we just have two legs that pushes up for our buy, and then we have three legs, 1 2 3, that pushes down for a sell. Okay, so this suggests to us that this is a down trend. Okay, this is a downtrend, guys. So the market structure of this market is a downtrend. Okay, so the market structure is actually a downtrend. So when we have markets pushing more to the downside, if you look here, you will notice that we have this our first leg here. Okay, remember, this our first leg, this our second leg, this our third leg, this our fourth leg, and this our fifth leg. So we have two up movements, and then we have 1 2 3 down movements. Okay, so we have two up movements and three down movements. So it means that the sellers are in charge of this particular move, guys. Sellers are in charge of this particular move, and so this suggests to us that this is a downward market. Okay, so this suggests to us that this is a downward market. Okay, and then this particular move is called an impulsive move. So we call this an impulsive move. Okay, that is called an impulsive move. And then this particular market, or this particular move, is called the retracement move. that is called the retracement move in the markets. Okay, and then after that retracement move, the next move was also an impulsive move. This is like the retracement move, and then this is like the next impulsive move. Okay, so guys, this is how to identify a down movement or a downtrend. Okay, so let's quickly look for an uptrend. Okay, let's quickly look for an uptrend so that we can know how market moves in an uptrend. Okay, I'm just trying to look for an example that will be clear for us. Okay, trying to look for a very clear example. So if we go to like the 4 hour, let's see, I'm just trying to look for, okay, let's just make use of this here. Okay, so here now you can see that markets actually moved here. So remember, this is like our impulsive move in the market. Impulsive move. Okay, after the impulsive move, what we have now is a retracement move. Okay, these are retracements here. So after that, the next move we have again is called an impulsive move here. Okay, after that impulsive move, guys, then what we have again is like a retracement here. Okay, it's like a retracement here, and then finally we have like another impulsive move. Okay, so now if you look very well, you notice that we have 1 2 3 move to the upside, and 1 2 move to the downside. Okay, so we have 2 moves up, and then we have 3 move, or sorry, we have 2 move down. Okay, down, and we have 3 move up. Okay, so this suggests to us that this is an uptrend. Okay, so the market structure of this particular market is an uptrend, guys. So this is how to know if this market is going down or up. So for this particular trade that we took, let's go to the 15 minutes time frame to know if we are in a downtrend or an uptrend. Okay, so if we go, let's make use of the 5 minutes time frame. Okay, so on the 5 minutes time frame, what we see here is this is like the first move down. Okay, or like the first move down here, and then this is like the retracement here. Remember, this like the down move here. Okay, and then this is like the retracement here, guys. And then this is like the next move down. Okay, So what we have price doing now is price is actually trying to make a retracement. Okay, price is actually trying to make like a retracement, and then any moment from now price might start uh downwards, guys. Price might start crashing downwards. So just hold this trade now. We don't expect price to break out from this particular resistance here. Okay, remember, this like the first move of the resistance, this like the second move, this like the third move, and then price is coming back to it again. Okay, so we are just going to hold this trade, and then ultimately this like the last place we expect price to get to. Maybe after this class I'm going to add more equity to my account so that we can load more positions here, because I feel that this is where price is actually targeting. Okay, you can see now that price has started crashing. Okay, price has started crashing at this particular level here. Okay, so just because of the class I just had to take this trade. Okay, because I might not have the time to be doing the analysis. Okay, so you can see on the 1 hour time frame now that the market, this particular market here now, is like a bearish candle on the 1 hour. Okay, and then if you go to the 4 hour, you will notice that any moment from now price will start rejecting. Okay, so guys, what we are going to do now is, hopefully tomorrow is Sunday, we might not be able to meet tomorrow, or even if we are going to meet, maybe it will be in the evening. Okay, so it might be in the evening time we might continue this training, this class. So I have to go and do other things now. Okay, so I believe we're able to get one or two regarding today's class. Please, if you actually got something, you can leave a comment. Let me know. If you are following, just type I am following, so that I will know that we actually followed this class. Okay, you can leave a comment, tell me that you were actually following. Okay, so that I will be sure that we are actually following this live stream. Okay, so please, you can leave a comment, let me know. And please, just like I said, whenever we are having our class, please let us do it to share this live stream. Okay, that's the like the least you can do. Okay, for this training that we are always having, you share this live stream. Okay, share it to your friends, share it to any forex traders, so that we can analyze the market together and take trade. Okay, and also you can do well to like this live stream. Okay, so guys, I believe we have been able to learn one or two from today's live stream. Okay guys, so just watch out, let us see what's going to happen on this particular market. Okay, let us see what's going to happen, then maybe subsequently we'll look at other markets and we'll be able to place a trade in the market. Okay, we'll be able to place a trade in the market. So maybe later we'll be looking at um other markets. Here there's like an order block here. Okay.